Welcome back to our CNBC TV18 Special Market Masters. We have been speaking with Mohnish Pabrai, the founder and managing partner of Pabrai Investments and the founder and CEO of Dhandho Funds. Well, Mohnish, before we headed to the break, you were telling us that there's still a lot of value in the mid-cap space, especially after their year-to-date fall. Now, let me start with one of the biggest sectors, finance. It's a broad space now. Banks, non-banks, insurers, mutual funds, and lately, corporate banks are doing very well. Do you like them? What do you like in this space?
Yeah, so one of the big problems with let's say levered financial institutions, banks or NBFCs and so on, is that you have a small sliver of equity, and on top of that you have maybe 5-10 times or more of your capital that is levered. And as long as you don't make mistakes in the lending and have different spreads, it works well. But in general, those are not easy businesses. I think that in some sectors, like I think even the housing finance companies, there's a lot of entrants, new entrants in the field. The barriers to entry are relatively low, and everyone and their brother thinks they can lend. The problem is in collecting, not in lending. And so it's always easy to give the money away. It's a lot harder to collect. So I would have a lot more interest in, for example, an asset manager than a lender, because an asset manager and lender, even though both are in the same space, in one case you've got this recurring revenue you have on a base of assets which is hopefully growing, and your cost can be a fraction of that. And you don't really have the risks of defaults and NPAs and all of that. So to me, the asset management business, in fact, I have not been able to find an asset manager in India that both from a valuation and future prospects kind of fits the bill, if you will. Usually they're well recognized as great businesses, and they're premium priced. And but the nature of markets is that they'll go vacillate. So at some point, I may get a chance to get into that space, and I would love to, because I think that that sector has nowhere to go but up. And I think the Indian savings historically have gone into real estate and gold, and that is in the past. And so when we look at GDP growth, we look at savings, we look at tier 3, tier 4 towns, tier 2 towns, and the savings flowing into the equity markets, which is what is happening and will continue to happen. That's a very strong tailwind for a very long period of time.
But do you also include insurance companies in this, asset managers that you're talking about?
No, I think insurance is a different business. And again, insurance, you've got to separate the property casualty from the life insurers. And quite frankly, I haven't done a lot of work on the Indian property. So historically, the Indian property casualty insurance business used to be purely state controlled, and insurance in general used to be state controlled. So the entrance in the field, if you look at healthcare and these other areas, relatively young histories, and I think one of the problems you have in property casualty insurance is the average property casualty insurer globally is a terrible business. Just because you have these fat tail events that show up every 5-10 years, so things look fine for 5 or 10 years, and then you get hit a lot with 1 or 2 bad events. And so it's a sector where I've historically had an interest, but I think it's good to be wary. So I have no investments in insurance, and I'm skeptical whether I can figure out where these companies are 5-10 years from now with any great precision or direction from my perspective. So I think that's
okay.
Insurance is not something I'm spending a lot of time on, if you will.
Okay. Let me come to what you already have. Sometime back, you bought Rain Industries, and you also bought Suntec Realty, right? You still like the real estate space, the Mumbai real estate space?
Yeah, I mean, if you look at a company like Suntec, for example, when we were first buying our first shares, maybe about 16, 17 months ago, we paid about 1/3 the current price. And so the first quarter of 2017 and the second quarter, the first half of 2017, was, in my opinion, a tremendous time to go into, especially Mumbai real estate. And it's worked out quite well. I think those areas have tailwinds for a while. I think in real estate in general, I separate Mumbai from the rest of India because one of the only geographies in India which is land constraint and wall-to-wall people and a very low quality housing stock. In Mumbai, for example, even if you're affluent, you may not be living in a great flat, unfortunately. And so I think in general, specifically Mumbai, where we're landlocked, we have large amounts of population and very limited areas available for development, those are really good traits for real estate companies. And also the thing is that we had a trifecta with demonetization, GST, and RERA. And so 80–90% of the developers are out of business. And so the survivors, there's a handful of survivors, to them will go the spoils. So I think Pabrai Funds, we have a significant exposure in specifically Mumbai real estate, and I'm thrilled about that. I think it is north of 700 crores, and yeah, I think we'll keep that for a long time.
Okay. Well, we have been voted the third more livable city in India. Leave us with what you want to avoid right now. What is your don't like list?
Yeah, so I think one of the things about capitalism is that you don't get paid more for degree of difficulty. So what Buffett and Munger mean by that is that there are some businesses, or most businesses actually, that are really tough businesses because capitalism by its very nature is brutal. And there are other businesses where an idiot can run them, and they just gush cash. And you don't get paid more for going into the difficult business. You actually get paid more for owning the easy business. And so it's a dichotomy in capitalism where one of the things I'm really looking for is what is the quality of the business? Is it a great business which can be run by an idiot and still make money? Or is it a business that has so many competitors and so, I'll give you an example. The typical bank. The typical bank is not a great business. They have to lend out 7 or 10 times the capital they have to make 1% on assets. Okay, so the thing is your 2–3% spreads. So your margin of error is really small. And we've seen what the impact of that margin of error is in all the PSU banks. So you can take the entire banking sector and say, a tough business definitely cannot be run by idiots. Okay, but if you look at a company like Coca-Cola, in its 30-year history or something, at least 50 years it was run by idiots. Okay, 5 decades. I can name, we had time to name the CEOs, but they couldn't destroy the business. Not only could they not destroy it, it grew like crazy. With decades of poor management, buying film studios, buying shrimp farms in Thailand, and then selling them all at a loss, all those things put together, Coke has been a great investment. And it's been a great investment because the core business is phenomenal and it's easy to run. So I think the trick I've learned is don't do math till the 4th decimal to invest. Look for the no-brainers. And that's what the most important thing, more than the checklist, I think, is looking for no-brainers.
Okay. Well, Mohnish Pabrai, it's a pleasure speaking with you. Sometime when we meet next time face-to-face, tell me those businesses that idiots can run and that gush a lot of money. Thank you very much indeed for joining us today.